Hi there guys, I hope you're all well and welcome back to another video. This video is going to be a quick one based off market structure, how to trade the trend, how to potentially spot when a market is reversing, and we'll go into quite a bit of detail on that, just because you do tend to get the better risk to rewards, and everything else which covers that. Now, before we get started, I just want to show you that we have started a free group on Telegram, and we just started this yesterday. So what we're going to be doing, we're going to be sending analysis in, we're going to be sending education in like so, and also any updates regarding what's going on with DVS FX. Now, the link to that will be in the bio. If you are on the fence about joining our paid service, then obviously this will be a good insight for you to see what to expect. The link to both the free and paid services will be in the bio. So now we've got that out of the way, all we are going to do is look at the two types of markets, and I say the two types, there's actually three. The first one we have is a downtrending market, the second we have is a ranging market, and the third we have is an uptrending market. Now, the characteristics of a downtrending market are what we call lower highs and lower lows. If we want to identify this, you can see that this here is, and we will initially call it a high. So that is a high within the market. Now, what do we notice about the next high? The next high is lower than the previous. Therefore, we would call this a lower high, because as it says, this high right here is lower than the one previous. Also, if we're looking at the lows, you can see this right here is a low within the market, and the next low is lower than the previous. So then we would call this a lower low. And as long as the market is continuing to follow this structure path, you would say you are only looking, for example, for sells or for shorts, or you might say it's a bearish market. That is the simplicity of a downtrending market. Now, a ranging market are probably, depending on what strategy you use, either the easiest markets to trade or the hardest. These markets right here simply don't really have any direction. So it's not necessarily as simple as up, down, up, down. You are going to have different highs at different points, etc., etc. So overall, if you're looking, there is no real direction within the market. Price is almost bouncing between two support and resistance areas. And we will in the future do a video on support and resistance, just to obviously give you a heads up regarding that. So that is simply a ranging market. We are only really interested right now in a downtrending market and an uptrending market, and you will see why further on in the video. Regarding an uptrending market, it's literally just the flip side of what we've previously seen here in the downtrending market. So you can see here, this is a high within the market at this point. This right here is a low within the market. And what are the characteristics? This next high is higher than the previous, and we will just abbreviate it as HH. And this low is higher than this low, therefore you have a higher low. And as long as the market continues to do this, then you could say you are only looking for buys and you are only looking to take trades in the direction of the trend. There is a saying within trading, the trend is your friend, and it's not wrong. Obviously, if you are trading in the direction of the overall market, then obviously you'd think that it's going to be good, and obviously it is going to go in your favor. Whereas we will go over now how to potentially spot the end of this. So what I'll do, I will just get rid of the ranging market here, just because we simply are not interested in it. Now, all we are going to do is now go over how to trade the trending market and then how to spot a reversal. So if we just focus on, at the minute, the downtrending market, and we will go into some chart examples after this. I just want to get, obviously, the basics done on here. So we have a downtrending market here. So the two areas that we are interested in a downtrending market are the immediate retest of the low. So expecting potentially something like that. Or as long as price stays below the lower high, and it has to be the previous one, we're not talking about this one, there is also an opportunity for potential positions here. So if price continued to push up from there, then we could expect a pullback. So these are two areas that you can use as confluence in a downtrending market. You are simply looking for a break and retest of the low, which I think most people who have started trading pretty much got introduced to break and retest. And then secondly, you've got what we call a double top. So it's just basically retesting this area to see whether or not price wants to stay bearish or whether it wants to break and then potentially go to the upside, but we will cover that shortly. So these are simply the two areas that you are interested in. Easy as that. Alternatively, if we are looking at this uptrending market here, we are always looking for, once again, the immediate retest of the previous high for a potential push up, or in this situation, we would be looking for what we call a double bottom, where we would potentially see price instead come back here before going. And all that happens in this situation is that it's just that the buyers weren't able to take price from here. There's a very good chance that price can, in fact, push from this point and continue bullish. However, there's a very good chance that maybe price would come into this area and retest for what we call a head and shoulders, which we can also get into, obviously, after this. So they are the two simple areas that you would be looking at in terms of an immediate retest. Now, I don't know where I am on the chart. I'm in the 15-minute. So, for example, let's just look at this market structure here. Now, what have we seen? And this isn't going to work every single time, guys. It's just a given. So, you can see here, there was the break and retest of the previous high here. So, if we are looking at the market based off what we've previously seen, this here is what we call a higher high. This here, obviously, was a low within the market. And then this right here, we are expecting a higher low to be made in the direction of the overall trend. Easy as that. Now, that is basically a simple break and retest in a buy scenario. You can see as well that if you're looking at this structure point here, obviously, it's usually good to go from the wick to the body just to get yourself a generic area. You can see that in this situation here, you've had a simple break and retest of a low like this. We have had a change of characteristics, which is what we can go over in a minute, but we are simply looking at a simple break and retest. Once again, if we are going, we can see here the market was trending down, if I do this correctly, like so. So all we are doing is simply looking for retests of the lows. Now with this, I'm not going to go into what this is, but it's almost like a liquidity grab. But this would be your area within the market. You can see it was retested and there was a reaction. Let's see, moving on, if there was obviously any more. Once again, you can see price is trending down. You can see, for example, you've got small break and retests here. You had a low within the market here, which was retested, and so on and so forth. You see the overall direction of the market. You are bearish. If we go into the example, what we was doing up here of the double top, you can see, and let me just get rid of these so you're not confused. You can see, looking at this, if this is the lower high, this was the low, what can we see happen here? We saw what we said in the previous, which was a double top. If we are simply looking at this, you are saying price come back. You can see all these wicks. You could even, if you really wanted, be like, right, just entering off pure price action. So what I'm going to do is basically put my stop there. You might target the low to the left like so. Obviously, it's easier saying this in hindsight looking back, but you can see there's 3 rejection candles here on the 15-minute of this double top. Easy as that. So that is how to obviously trade the trend. You are simply just looking at the characteristics of the market. You are either looking for a retest of an immediate low or the double top for the lower high. And then as well, you are looking for an uptrend, retest of the previous high, or a double bottom on the higher low. Easy as that. So if we then go on to potentially looking for reversals, what I can do is, if you're looking at an uptrending market, what you may actually see is that price is making these higher highs, higher lows, everything's great, but then there is a sharp move down, obviously, in the market. So then now what happens is, if price was to pull back here, the characteristics of the market is that price has made a higher high. Obviously, this here was a higher low, but now the higher low has turned into a lower low, because this low here is lower than the previous. Easy as that. Now, when this happens, what we can expect to see is a potential retest of this area here, which would simply just be a break and retest of previous structure before we see a push down. Or alternatively, what you can see is what we call a head and shoulders, where it's almost like a double top, but we're not really going to go into it because realistically there is actually 3 areas price can react at, so I'm not really going to go over that. We will simply look at this right here. The change in market structure, the change in characteristics, and simply looking for the immediate retest of this higher low, where then the higher low is retested and a lower high within the market is made. Just like that. So it's just seeing, you can obviously say, oh, well, there's a trend line, etc., but it's not really needed in this scenario. You're just looking at the market structure. Once again, going over to a downtrending market, all we would be looking for is that, let me just get rid of these, is that once price has made, obviously, this lower low, price has continued pushing, but now it's broken the lower high. The minute the lower high is broken in a downtrending market, you can potentially shift your bias and then maybe looking for price to retest that area before getting a large move. And you just, if you look at this from a simple perspective, you can see the characteristics there. Nice change, a nice shift in momentum, and then seeing what is what. So for example, if we look at this chart below, going over the previous examples, what can we see? Well, we can see that this was a low in the market, this was a higher high, this here was a higher low, like just in and around that area, and then this was a higher high. Now, what did we see then? Well, if we're saying that the only areas we are interested in is, for example, the immediate retest and the double bottom, what did price do? It slammed through the higher low and then came back to retest the higher low. As what happened was support then became resistance. So the characteristics of this market were bullish, bullish, bullish. Everyone's buying, everything's great. But then you can see the change in behavior. This change in behavior signals a potential reversal. And you can see what happened on top of that is that it almost did the double top we were speaking about. So maybe you didn't want to enter on the immediate retest. You wanted to enter after this candle here. And you can see, just in terms of risk to reward, instead of just trading a break retest and obviously going to the previous high, you then see price just sell off. And we're not going to act as if it's a trade you may hold, although you might. But then this trade, just based off the reversal, would be running, for example, 9-1. Just based off price action on the reversal. So that there is a great example of what we would call a reversal in a bullish market. You've seen the characteristics, it's going great. Now let's just see if we can go back and see a characteristic change in a downtrending market. So all you are simply doing, and it can be this here, so all you are simply doing is saying, right, what direction is the market going in? The market right here is going down, everything's great. Now, what happened? This right here was a lower high within the market. You can see it retested the previous low like we'd like to see. Then a new low was made and a lower high was made in and around that area here. Okay? So then what happened, if we look, is that you can see this area here was then broken like so, meaning that we've had a structural change within the market because this high made this low. Price then broke this, and you can see here, came back to retest the area. If I just do that, you can see price did actually end up coming back to retest the area here. Obviously, it didn't really give a good entry in terms of price action, but maybe you like to draw fibs and stuff like that, and you thought, well, I've got a 61 fib, break retest of that area. But that is just a simple example of that happening. I will try find a better example for you, just because it's obviously not the cleanest. So once again, you are looking just for a downtrending market. This is what we would classify as a ranging market. Obviously, price is pretty much just going from top to bottom, no real direction. And there's nothing wrong with them markets because, as you can see, you can buy at the bottom, sell at the top. But it's just not the best market to, obviously, trade. So let's just have a look, looking for a downtrending market. And again, this is just off the cuff. So you can see just from a characteristic change, you had a bit of a range here. Like so, price was bouncing, bouncing, bouncing. You then did actually have a change in behavior. So you then saw the market push up. Price then made a higher high off this low. So then you can see price then broke that low. So if you are looking at this from a structural perspective, you are saying, well, I was bullish here. Now I am bearish right about here. So if we are simply looking at market structure, this is a lower high. This is a lower low. Lower high was then broken and retested. You had more than enough price action here showing you that price was going to go long. You could even have entered off that huge bullish candle there. And then you are simply looking at this and you can see, obviously, the market did continue to push on. Just looking at the low, or the high which made the low, break retest, wick rejections, getting in, and it's easy as that. So that is pretty much a basic lesson on market structure, trading the trend, how to spot a reversal. I hope it did help you. Just another reminder, there is a link to the free group in the bio, also the paid one if you are interested. But yes, guys, thank you very much if you got this far, and we will see you in the next video.